So look, here's the thing. Bitcoin hit all-time highs again this week, and if we're tracking the 4-year cycle, then crypto should be peaking right around, well, now-ish. But at the same time, none of the usual top signals are flashing. Markets are kind of a melt-up mode as the debasement trade heats up, with the macro environment signaling to go risk on before a major correction further down the line. So what happens next for Bitcoin in the broader cryptocurrency markets? Well, there are 3 critical charts telling us what the next move is, taking into account macro liquidity and the way assets track each other and move together. So let's go through them, break each one down, and try to figure out what this could actually be telling us. And we have to start off with the reality about Bitcoin's cycle structure. Has the 4-year cycle, halving cycle, been a useful navigational tool up until this point? Yes, of course it has been. But when it comes down to it, it's only provided us with 3 previous data points, which is basically lined up with the business cycle and the credit cycle anyway. So how much has it actually been coming down to the Bitcoin halving cycle itself? But sure, the issuance change has become basically less relevant anyway, as supply issued moves closer to 100%. It's currently at 95%. Bitcoin is now at $2.4 trillion. So it should move more in line with macro trends and less be respondent to these sort of more rigid structures of the Bitcoin halving cycles. And actually, maybe that's exactly what it always has done anyway. See, take a look at this chart here from Decode Jar, and you can see how Bitcoin's price action has basically been tethered to the macro environment. The oscillator at the bottom shows the macro trend, and you can see that it's entering a green period right now. Well, all previous bull market peaks have matched up with this signal. So will this time be different? Well, if Bitcoin peaks now, then actually, yeah, that would be super different. And that would actually represent a break with the existing macro correlation that's kind of always happened with Bitcoin. Don't forget, Bitcoin is now a mainstream asset. BlackRock shilling it, Fidelity shilling it. It's more integrated in the financial system than it's ever been before. Crypto ETFs are pulling in major flows, and there's no compelling reason why Bitcoin should suddenly now decouple from the wider risk-on liquidity environment. But let's move on to the second chart, which basically shows Bitcoin versus everything. But before we get into that, guys, question for you. Will you start taking your trading seriously? Move over to an exchange that's going to respect your privacy and give you some insane sign-up bonuses. That place is called BitUnix. I'm doing a lot of my futures trading there these days. You can join me over there. Long the rips, short the dips, deep liquidity, and all the big stuff. They got the exotic altcoins you want to trade too. And here's the deal. Deposit $2 grand, you're going to get $400 back. Deposit $5 grand, $500 back. 10 grand, $700 cash back. That's insane. Crazy trading bonuses as well. Plus, we're giving away $1,000 in every live stream. So if you want to join us and get those sweet bonuses, link down below. Okay, Bitcoin versus everything. So look, this one was posted by Luke Grauman, and it makes direct comparisons between major asset classes over the past few years to highlight what's being called the debasement trade. And this is actually something that Bitcoiners have been talking about for over a decade. Bitcoin isn't necessarily going up in value. It's more like the dollar, and the other currencies are going down so dramatically by comparison. And it will keep going down as long as fiat issuers keep printing money, which is exactly what they do. They really don't have any other out except to keep printing to infinity. But what's happening now is that this reality is getting mainstream attention because you just can't ignore it anymore. Capital is fleeing from the fiat system to hard assets, which is why you see gold getting such incredible bid even at these eye-watering market cap valuations. Gold and Bitcoin are at all-time highs. This will continue. So anyway, on the chart, you can see that when valued in USD, everything is up. Stocks, homes, everything appreciating. But that's because the dollar is depreciating. As you can see, if you value those same assets in gold, in which case the NASDAQ is still up, but way less than when valued in USD. Well, the S&P 500 and home prices have actually gone down when priced in gold. And if you take BTC as the standard, then yeah, absolutely everything has gone down massively in relation to Bitcoin, and by a lot. You might find some short-term variances on things like Bitcoin versus gold or Bitcoin versus Nvidia, but generally that's been the trend. So this tells us that the state of the market is all about perspective. Think in dollar terms and prices look crazy, but switch perspective and realize that USD is just one of many assets, and suddenly the picture is inverted. The dollar is melting. Most people didn't notice because it happens gradually. And not only is Bitcoin, as a result, the best performing asset of the past effing decade, but as long as that situation, the dollar debasement continues, which is, by the way, the plan from Trump and Bessent, then there's no reason for Bitcoin to stop outperforming in this way. In fact, the function is at the very heart of its value proposition. Now let's move on to our final chart, Bitcoin compared to the M2 money supply. And actually, we've got a bonus comparison here too, Bitcoin as it measures against gold. And there are not really very complicated things to see. It's pretty clear from the lines on the first chart here that Bitcoin follows M2, broadly speaking. It's not a direct slave to it. It tends to have quite a bit of a lag, in fact. Now, there is a delay, okay? Bitcoin lagging M2 by anywhere from 70 to 140 days, something like that. Let's call it 102 days. Meet in the middle somewhere. If that pattern holds, then Bitcoin should continue to make gains from here as it tracks up to match M2. Is that guaranteed to happen? No. Has our correlation to M2 slowed down a little bit? Yes. But again, it would be a case of this time is different if Bitcoin did not make new highs later on from here, and this chart projects $167,000 as the next target, which generally lines up with a lot of things we've talked about, a lot of different charts we've talked about here, anywhere from 150 to 160, 167, sure, I'll take it. Sounds like a great number. M2 at around 114 trillion right now. We've also got the BTC gold correlation shown on the second chart, and it's a similar story with BTC following gold, but in this case with, again, a lag behind it. They put a 200-day lag on it. The lag can be anywhere from 40 days to 100 days. 200 days, sure. Look, gold along with silver and palladium has been going absolutely crazy the past few months, and it's now trading above $4,000. It'll hit above $4,000 a week. Depending when you're watching this, may end up trading above $4,000. The correlation here puts Bitcoin at $185,000 if that pattern holds. Again, we've talked long period here about the next local peak coming in between 150 to 180K BTC, so it's not out of bounds, to be honest. Price targets, of course, are never 100% precise, but that's not the point. It's about the trend. It's about where the tide is going. The important message, the important takeaway here is that liquidity leads, hard assets respond. Bitcoin is already heading in the same direction as gold, which means that this cycle is definitely not done yet. Or more accurately, a 4-year cycle isn't, and perhaps never was, the hard and fast rule for Bitcoin. And actually, we need to focus more on the macro regime, especially now with Bitcoin more tied with ETFs and institutions and treasury companies and all that kind of stuff to the stock markets than ever before, okay? We need to focus on the macro regime because Bitcoin is a part of that cycle, just like every other asset out there. Also, if you take a look at the economy, the outlook is not matching up with some of the most doomer takes that keep flying around with employment-related data, not currently indicating that a recession is, at the moment, a valid concern. Will that be the case a year from now? Maybe. We'll see. A year's a long time from now. A lot of shit can happen between now and then. A lot of money can be made between now and then. But we trade what's in front of us. And to put things in perspective, ask yourself this. If equities continue to rise, gold and silver have farther still to rally, and capital is moving away from fiat, then what are the odds that Bitcoin doesn't make further gains in the coming months? It would be very contrarian to say that. Not to say the contrarians won't be correct, but it would be rather contrarian. And to be saying that this time is different when in fact, this time is basically always the same. Thanks for watching.